Alright guys, welcome back to a new video of this show, Trading Supply and Demand for a Living. Today we have episode 15 and I'm going to break down this gold trade that I took yesterday. Today I didn't take any trades, I didn't see any opportunities in the market. There was a few on Nasdaq, but I really didn't like the setups, and we also had CPI today, so it was kind of risky to trade today, and I ended up not taking anything. But yesterday I ended up taking a trade super late, which I'm going to break down in this video, and it was a demand on gold. So if you guys can see, first reason why I was really scared about this setup is because gold, the demand happened at around 10:30, 10. This is the demand right here, 10:30, 10:45. All right, so that is the demand. When it tapped, it was literally 10:30 a.m. and I lose the most after 10:30 a.m. Usually my trading time is between 7:30 8 a.m. to like 10:30, most likely 11 sometimes. And I lose the most if I take setups after 10:30. That's what I have noticed in backtesting and also when I'm trading. So that was the first reason why I was really scared with this setup. Another reason was that gold is close to all-time highs. So this is the all-time high for gold, and we was really close to all-time highs. Every time that we get close to it, like it happened back here, we had a massive drop after that, and now we are close once again with gold to all-time high. This was yesterday, so that's why I was also scared on taking a demand setup. And the third reason why I was really scared is because we have been trending up on gold, if you guys can see, without a clear pullback. All right, so we haven't had a clear pullback on gold on this trend. Like even if I go to the 1 hour chart right here, you can see it better. It was just up and consolidating and pushing up and now consolidating. So I was really scared on taking a buy as well, especially late on the day after we already had a session on New York session. Like the beginning of New York session was bullish. I was scared of taking a demand, and I'm actually caught on the reversal on that pullback late on the day, which usually after 10:30 11 a.m. we get reversals in the market. So that was the only concerns. Other than that, we are going with a trend because we are still looking bullish. So this is not a counter trend setup. Even though yes, we are high, we're still going with the trend. And also we are following the EMAs right here, guys. If you guys can see, we have the 13, the 50, and the 200 sitting right there. Very good. That's how I like to see them if I'm going to be taking a setup. And also by the time that we got the candle break, which was literally right here, right, this was the candle break right here. It was above the 50 SMA. So when we are above the 200 already. When we tapped the demand, we was below the 50 and below the 13. But the candle break, when we broke the candle, we already closed a bullish candle above the 50. So we broke that SMA. Now we only have one EMA, the 13 EMA to break, which I like that. If I'm going to be taking a setup and I have two EMAs to break, that's gonna throw me off a little bit because we really need to push up with momentum. But before giving the candle break, if we already broke one EMA and we have two of them in confluence, we only need to break one. That is really more possible. All right, so I was aiming for a 1-to-1. Again, it was late on the day, so I risked like 0.75% of my account. I ended up making like $300, I believe it was, which by the way, let me show you second, let me show you the account right here. This is the other one. This is the one on the challenge, which we have it at $51,800. All right, guys. That is the account. It was sitting at 51,500 last video, so we ended up making like $300 only on this trade. As I said, I was risking like 75%. I wasn't risking big amount, so only like $300 to lose. I only put one contract on this. And also, I want to show you guys. Some of you have been asking me for the settings on the EMAs. So the indicator. This is the indicator. It's called 3 MA, and you guys can see right here length on MA1 is the 13, and I put EMA right here. EMA 2 is the 50, and I put SMA, and then the EMA 3 is the 200, and I put an EMA. So it's the 50 SMA, 13, and 200 EMA. All right, that is the indicator right here. I think you guys can find it. Let me see, maybe this one. I think 3MA, yes, right there. So you just put 3MA and that will be the indicator right there. And on my chart, I have 13 as blue, 50 SMA as a red, and then 200 as white, the 200 EMA. So I know many of you have been asking me about that, so there you go. And yeah, so I used entered this trade on that break of the candle, and I was holding a little bit. We went so close to TP right there, and then next candle started coming back down. So you kind of see how long it takes, guys. Like usually, it did hit really fast, but after you got this type of candle, why are you getting this type of candle next? You know what I'm saying? It's just because we are close to 11 a.m. and which usually reversals happen at this time. But anyways, TP was hit, so I took my profits at 1 to 1. I know I said that I was going to most likely hold the next trade a little bit longer, but just because of the time of this trade, I just close everything at 1 to 1. I like that this candle closed after above the 13 EMA. When I saw that it closed over here and the 13 is over here, I was really confident on this setup here in TP. And also next candle came all the way back down and rejected the 13 and also this green candle as well. So next candle hit TP, I used close full, and the rest was history. And if you guys can see, for the remainder of the day, we started consolidating, which is what I've been telling you guys, that after 11 is honestly just a consolidation phase, to be honest. And then after that point, literally our TP was hit over here. We just literally reversed for the rest of the day. We started consolidating and coming back down in the market. So that's very important for you guys to understand. Like you can have a trend on New York. You come from a trend on London, and New York usually likes to do reversals. Like if you see right here, London was bearish. It was coming down on gold, and then pre-New York consolidating, and New York pushed up. This can happen. This will happen very often. So New York will either reverse, like London will do bullish momentum. Let's say London will do this, and then pre-New York consolidates, and New York will have the pullback, or London will push up slowly with some consolidation at the end of London, then pre-New York consolidates as well, and New York keeps pushing up, and it is a follow-up day. Sometimes that will happen as well, but mainly, most of the times it likes to reverse from whatever London did. So in this case, London was just consolidating right here, pre-New York consolidated, and New York followed up the momentum that we had pre-London and on Asian session. So you guys can see it right there. Consolidation same as well over here in London, and we had a push at the end, and then New York pushed it back down after that. So really important for you guys to understand. London came back down, consolidating a little bit, and New York reversed and went up. Let's see this other one. So London consolidating but went up. Pre-New York consolidated a little bit, and New York pushed up a little bit and then reversed the whole trend from London. Um, London went up over here, and then New York reversed back down. So you guys can see the pattern, right? Like usually, you're either going to get something like this on New York, where London comes and pushes the price back down, then pre-New York keeps pushing back down or consolidates, and then early New York you're going to follow up the trend. If you follow up the trend, expect a pullback at 10 a.m. Most likely 10:30, you're going to be expecting a pullback, like what happened right here. So it got pushed all the way from London all the way back down, and then at 10 a.m. we literally was consolidating, and then we pushed to the upside because we have been dropping for so long. You have to pay attention to what London did before you come into New York, because that's most likely going to tell you what can happen. If London really pushes a lot to the upside, New York might pull the market back down, might be bearish. If London was super bearish, New York might be a little bit bullish or might consolidate. Right, and if London was a consolidation, whatever the breakout is early in New York, if it breaks to the upside, most likely you're going to get a continuation on that phase. Like if London does something like this and New York breaks early, then you're most likely going to get a follow up, because this was used as consolidation for then the movement in the next session. So London will do this, and then New York will pick a side. All right, so make sure that you guys pay attention to what happened in London. This is why I like trading New York, because when you trade London, you cannot see what happened in Asian session. You don't have volume for anything on Asian session, so it's really slow on Asian session, and it's the day before as well for me. So that's why I don't like trading London. I like waiting for London to happen, do its thing, and then New York, when I come into New York, London will kind of guide me on the direction of the market. Also, I'm paying attention to break of structure. I'm paying attention to the high and low of London session as well. That's really important as well. And just following the trend and the EMAs and market structure. So really, really pay attention to that, guys, and you're going to see that it happens very often where London will be one direction and New York will reverse that. Maybe not completely, but London will be super bullish and New York will have a pullback. For then, the Asian session that night maybe pushes up once again on the bullish trend or whatever. So make sure to subscribe, guys, if you like the video. As always, leave a like and put in the comments any suggestions for future videos. That is it for today, and I'll see you all in the next video. Take care.